So the Federal Reserve just wrapped up a huge meeting, and their decisions have at least one analyst out there predicting a massive shift in economic policy. We're going to dive into this explainer and break it all down. What the Fed actually announced, what the Fed chair, Jerome Powell, really said, and why some people are now saying this is a clear pivot, a pivot right back towards printing more money.
And that's the big claim from the source we're looking at today. We're not talking about a little bit of stimulus here. We're talking trillions of dollars. That's a huge prediction, right? So how do we get from a simple policy meeting to a forecast that big? Well, it all starts with what the Fed actually did.
Okay, so to really get this prediction, we've got to look at the two key things that came out of the Fed's big meeting, the FOMC meeting.
All right, so first up, they cut the interest rate by a quarter point. This was pretty much what everyone was expecting, so no big surprises there. But the second decision, now that's the one that really got people talking. They officially announced that they're ending their monetary tightening program. You might hear it called balance sheet runoff, and that's happening on December 1st. And that, right there, is a huge turning point.
So what even is this balance sheet runoff? Well, it's just a wonky name for a policy called quantitative tightening, or QT for short. And really, it's the exact opposite of money printing. The Fed was basically sucking money out of the system to cool down inflation. And now, they've just put an official end date on it.
Okay, so this is where the source we're looking at frames this whole thing in a really specific way. They're saying that ending this tightening isn't just a one-off decision. No. It's step 2 in a 3-step dance. Step 1, cut interest rates. Step 2, end the tightening. And step 3? Well, according to this analysis, the inevitable final step is, you guessed it, firing up the money printers again, maybe as soon as 2026.
But hold on. If this path is so obvious, what did the head of the Fed, Jerome Powell, actually say about all this? Well, when he got up to speak, he basically threw a bucket of cold water on that certainty. He painted a much foggier picture.
Yeah, this was the question on literally everyone's mind. Going into that press conference, the market seemed pretty sure it knew what was going to happen at the next meeting in December. The only real question was, does the Fed see it the same way?
And look at this. This shows you just how certain the market felt. We're talking traders betting with real money, pricing in, get this, a 92.8% chance of another rate cut in December. I mean, that's about as close to a sure thing as you get in the markets. It was basically a done deal. Or so everyone thought, right up until Powell started talking.
And there it is. With just one sentence, Powell completely torpedoed the market's big assumption. He made it crystal clear, hey, don't go betting the farm on a December rate cut. So you've got this huge disconnect, right? The market sees a clear path forward, but the Fed itself is waving a big yellow flag of uncertainty.
And he didn't even stop there. He kind of pulled back the curtain a little bit and admitted that, hey, not everyone at the Fed is on the same page. He said there were, and I'm quoting here, strongly differing views among the committee members. What does that tell us? It tells us there's a real, serious debate happening inside the Federal Reserve right now.
So, okay, what's with all the hesitation? Why so cautious? If things are slowing down, why not just cut rates and get it over with? Well, it turns out the Fed is dealing with let's call it a very practical and pretty unusual problem.
And that problem is something they're calling a data drought. See, because of a recent government shutdown, a lot of the key economic reports, the official numbers on jobs and inflation that the Fed absolutely depends on, they just weren't coming out. So without that critical information, they're kind of flying blind.
And Powell himself came up with the perfect analogy for this. He said, what do you do if you're driving in the fog? You slow down. And that really says it all, doesn't it? You slow down, you're cautious, because you just can't see what's coming. That's the Fed's official story right now.
Okay, but despite all this talk about being cautious and driving in the fog, the analysis we're looking at says the Fed is ultimately trapped. Their hands are tied. They are cornered by the one thing they absolutely cannot ignore: inflation.
I mean, Powell was crystal clear about this in the press conference. He said the Fed is absolutely committed to getting inflation back down to that 2% target. And when you make a public promise like that, it makes it really hard to turn around and do something that looks like you're just pouring gasoline on the fire. Something like printing a ton of new money.
And it feels like they're being squeezed from both sides here. On the one hand, Powell admitted they're expecting new price pressures from things like tariffs, though he thinks they'll be moderate and transitory. But on the other hand, he also flat out said that people, consumers, are still quite unhappy about the crazy high prices we've all been dealing with. So they're stuck between new inflation risks and lingering anger about old inflation. Not a great spot to be in.
So how do we square this circle?
On one side, you have the Fed talking all about caution. On the other, you have this bold prediction of money printing. So let's look at how the source analysis connects those two dots. It lays out a very specific chain of events.
All right, here's the predicted roadmap. Steps 1 and 2, already in the rearview mirror. They've started cutting rates, and the tightening policy ends December 1st. Check and check. So now we're in step 3, what Powell called a pause for a time. But here's the twist. The analysis argues this pause isn't really about being cautious, it's about waiting. Waiting for step 4, for something in the financial system to break. And when that happens, and only when that happens, they'll have the justification they need for the final step. Turn the printers back on.
So if you follow this line of thinking, the Fed's vagueness isn't about them being confused. It's a strategy. It's a waiting game. The idea is that they need some kind of problem, some kind of crisis in the markets to give them the political cover they need to swoop in and save the day with a whole new flood of cash.
And you know, while all this high-level policy stuff is happening, Powell did say something that brings it right back down to earth. He basically admitted that even if the numbers on paper start looking better, it's going to take a long, long time for people to actually feel better. It'll take time for our incomes to catch up and for that sticker shock from the last couple of years to finally wear off.
And that leaves us with the big question, doesn't it? On one side, you have the Fed telling us they're just driving slowly in the fog, being cautious. On the other side, you have this analysis saying that fog is actually a smokescreen, and behind it is a clear path leading straight to trillions of new dollars. So, are we really just in a temporary pause? Is this just the calm before the next big inflationary storm?